So, good morning, good afternoon, good evening, depending on the time you are watching us from. So, just like I promised in my previous video on break of structure, I was going to take fair value gap. So, our teaching this period is fair value gap. Fair value gap. So, the question you would want to ask yourself is, what is the meaning of fair value gap? So fair value gap is an imbalance in the market where price moves so quickly in one direction. Yes, price moves so quickly in one direction and does not leave enough order. Now, this is what I mean. I said it is an imbalance that is caused by price moving so quickly in a particular direction. What is the meaning of imbalance? Imbalance means when you have this impulsive move to the upside, means buyers are in charge, and then price came. If price should come all the way down, what would make price successfully move all the way down is because sellers are in charge. So when there is an equal moves between buyers and sellers, you say the price is what? There is a balance. But when there is an unequal move in price between buyers and sellers, you said there is an imbalance. Now this is like a balance move. Buyers and sellers are just fighting. Now, when we have a push to the upside this way, upward, and then price returns, this push to the upside, when you do not have the activities of sellers in between candlesticks along this buy move, that means there is an imbalance that is created. Now let me give an illustration. Let's say we have one candle, two candle, and three candlesticks. This is just a simple illustration on how to identify a fair value gap. Now this is the wick. We have the body and the wick, which forms the candlestick. So, and then the third one. So this market opens at this point where this candlestick started from. Market opens and push down to form a low. This bottom of this wick is the low. Push up to form a high and then closes here. So we have open, low, high, and close. Now the same thing happens here. It opens here, goes low, goes high, and closes. It opens here, goes low, goes high, and what? Closes. Now, by identifying a fair value gap, you look for it is a three candlestick pattern in such a way that the eye of the first candle, you mark the eye of the first candle. Let me move this a bit high. And then let's have this. So we have the eye of the first candle, and then the low of the third candle. So the space in between here, from here to here, is your fair value gap. This space in between is your fair value gap. Now let's quickly look at what it looks like in a chart. You will need to go and practice this, check your chart so that when you can see it, you cannot unsee it. Now, you identify not every fair value gap is tradable. That's what you need to know. Not every fair value gap is tradable. Now, price have been pushing down, and then it broke this structure. After breaking this structure, what can we see here? This is this 3 candlestick pattern I'm talking about. This is the first candle, second candle, and the third candle. Now, this, you pick the bottom, the low of this first candle, and then you pick the top of this third candle, and this is your fair value gap. So you see the way price moves back inside into the fair value gap. Now, price have been moving in this way. It has been breaking structure, moving from top to bottom, moving upward and breaking lows. At this point, we have price took out this structure. After this break of structure, after this break of structure, we have this impulsive move. Now, it is from this impulsive move, I told you that this impulsive move, we have our 3 candlestick pattern. This is the first candlestick. This is the first candlestick. You move, you have your fair value gap. This is first candlestick, second candlestick, third candlestick. So we have this. Now, the whole of this moves here is the imbalance we are talking about, because there is no activities of sellers. These black candles means sellers, the sell candles, and this blue candle means the buy candles. Now, there is no black candle in here. It means that this, we only have the activities of buyers here, and this is an imbalance. It means price will have to push into this imbalance to cover up the gap that the buyers have created. Now, though price moved into it, tapped into it before pushing to the upside, but it is expected that price should have moved to 50% level, which is around here, before moving. But what did we see? We saw price push to the upside, kept breaking out structures and all of that. So you will just need to go into your chart and identify. Not all fair value gap is tradable. Just like I've said, when you identify it, the fair value gap must be responsible for a break of the structure. Now, after this, look at this impulsive move, and then this structure, it was just taking a little bit, and then price pushed down. This is a fair value gap. This is an order block. I will still release a video on order block. So if you actually want to know what the meaning of break of structure means, in my description, I'm going to put in the link just in my description below. You can click on the link to see what fair value gap really means from my previous video. Now, this is it here. Price moved this way, broke structure, and created a fair value gap here. Now you will discover that we have 2 different fair value gap here. Let's go to 4 hours so you can see this better. Now, in our 4-hour time frame, what do we have here? This is price broke this structure. See it? Broke this structure. This is a break of structure. And what happened? This is the fair value gap. This is the fair value gap. And what did you see price do? Price retraced into the fair value gap and pushed all the way up. Now it created this imbalance also, took it out. Then what happened? It started forming structure to the upside again, forming this imbalance. This is the next imbalance we have on our 4-hour time frame. This is our fair value gap. So you see the way price came into this fair value gap and started pushing up to the upside. So fair value gap traders will just take their entry from here and then put their stop loss below here and target this like 1:3.5. So but then how do you trade your fair value gap? This is a 4-hour time frame. Let's move to the 1-hour time frame. Now when you go to the 1-hour time frame, what can you see? You can see that this is the fair value gap we saw in our 4-hour time frame. So now what did you see? You see that this is the fair value gap here. There's a little bit gap here. But then let's make do with this. For you to take a trade on your fair value gap, you should see some rejections, some candlestick rejections. If you go to your go down to your 15 minutes, and let's see. Now in our 15 minutes, what can we see here? Let me zoom out. What can we see on the 15 minutes? We saw rejections from this zone, price trying to push up higher, and then what happened? Price took out this low. That is more like a sweep of liquidity. It took out liquidity, and the moment it took out liquidity, it broke structure. The moment it took out liquidity, it broke structure to the upside. Beautiful. So this gives you a good entry from this zone. You take your entry from this zone. Now when you take your entry from this zone, this is your buy, and then you can put your stop loss below the fair value gap zone. And then what are you targeting? You can decide to target this high here, or you target the overall high from the 4-hour, because yes, you target here. That's the overall take profit. So but you see how price got to our first TP and then hit the other TP. Now after this break of structure occurred, what did you see after this break of structure? What can we see? We can see another fair value gap here. Let me remove this. We can see another fair value gap here. This is it. This is another fair value gap. This is another fair value gap. If you draw it to this side, you will discover price just reacted from it. You see that? You see that? So having this knowledge of fair value gap, look at the rejections. Price rejected the first time, rejected the second time. You can take your entry from the third rejection. It's telling you that price is respecting this fair value gap and wants to push price to the upside. So go to your chart and look for examples. This is another fair value gap here. This is another fair value gap here. If you see it, you cannot unsee it. So from these rejections, you should see that price is wanting to push to the upside. What can you even see? If you go into this zone, you see price was engineering liquidity around here. This was what price did around here. This engineering liquidity, inducing buyers and sellers into the market, and what swept liquidity came in here, went up, came back down, and broke this structure. Yes, this is a break of structure. If you go to the 5 minutes, though it looks like a sweep of liquidity on the 15 minutes, but on the 5 minutes it is a break of structure. On the 5 minutes it is a break of structure. See it closed with a full candlestick. So now the moment you see this, you should know that you can engage this from your order block. So you would have taken this trade from this order block, and then your stop loss will just be below the fair value gap. And this is like 5 pips. 5 pips to catch how many pips? Let's see that. So this will be your take profit. This is about 51 pips, and boom, TP eats. So just go to your chart and look at it. You can see it. I can show you, I can keep showing you. After this sweep of liquidity here, we have a break of structure. I've told you that your fair value gap must lead to a break of structure. Now, where is the fair value gap? Here's our fair value gap. Here. That's our fair value gap. So, taking that sell, now you'll be in. This is another break of structure here. Another break of structure. And what happened? Price came into this fair value gap. This is the next fair value gap. And boom. See it. So go into your chart and look for more examples. Now, if you see price is reacting from somewhere around here, and there is another fair value gap here. There is a fair value gap here. Price is reacting from. You see that? So we've seen a sweep of liquidity here. We've seen a sweep of liquidity here, and then we've seen a break of structure to the upside. A break of structure to the upside. This is a good zone to take your entry from. So you can take your entry from this zone. After this break of structure, this is like a support zone. This is like a support zone. So this is it. This is what price is doing. So that will be all for this lesson. Go into your chart, check for these things I've pointed out: fair value gap, and if you want to know how I spot my break of structure, just like I've said earlier, I'm going to drop the link in the description below. So if you find this video valuable, you can do well to click on the like button, and if you have not yet subscribed to this channel, click on the subscription button and also turn on the notification bell so that you can be notified when I drop more of this valuable content. I'll be dropping more of this kind of content on this YouTube page. So do well to subscribe and share to fellow traders like you so that YouTube can, recommend it also to other traders. Thank you very much. Do have a wonderful day.